the most frustrating costs for homeowners and investors alike is property taxes. Not only do they increase over time, but they never go away. While the amount you owe depends on several factors, there are ways to lower your property taxes if they're too high. In this video, we focus on a few strategies rental owners can use to reduce this inevitable expense. Hey everyone, it's Alyssa here from Bay Property Management Group. Before we get started, be sure to subscribe and hit that notification bell so you never miss out on our exclusive content. With that said, let's jump into today's video. Property tax is an annual cost on real estate owned by individuals, businesses, or other entities, which takes into account the property's value rather than income. In addition, property tax rates depend on where you live, since they're set at the state and local level. Since state and local laws differ, it's essential for investors to research applicable tax laws before buying a rental property. So why are your taxes higher than your neighbors? If you notice your property taxes are higher than the other homes near you, there may be a few reasons for this, but it ultimately comes down to the value of your property. A tax assessor will look at your home's square footage, amenities, comparable properties, and more to assign your property tax. Generally, they'll reevaluate properties each year, which may indicate changes in your property taxes or differences between your taxes and your neighbors. If you feel you're paying too much in property taxes, or you're not sure why tax rates have increased recently, there are a few steps you can take. Let's take a look at 6 steps that could help you lower your property tax expenses. Number 1, ask for your property tax card. Sometimes errors or problems pop up in a property tax evaluation, resulting in discrepancies. Therefore, one of the simplest ways to check for any errors in your tax evaluation is by requesting your property tax card at the local assessor's office. Your property tax card includes information about the size of your lot, the square footage, and the types of fixtures within the home. Number 2, compare neighboring home values. Just as you can ask for your property tax information, you can also request other property assessments near your location. You can generally get this information at your local town hall. So if you're wondering how your home compares to others in the neighborhood, you can request this information to learn more. You may find that you have a similar property, but find that they are valued differently. As such, you can use other tax evaluations to determine inconsistencies and potentially lower your property taxes. Number 3, challenge your assessment. If you notice errors or discrepancies between your property value and similar properties in the area, you can challenge your assessment. While you can't change your tax rate, which is set by the government, you could intervene if your home is valued incorrectly. Tax assessors commonly look at comparable properties to establish your home's value. However, this could lead to inconsistencies or your property being overestimated. Number 4, avoid updating and remodeling. Updating or remodeling your home can raise your property taxes, as they raise the property's value. However, when it's assessed after a remodel, any upgrades will be considered while determining the value that taxes are based on. While upgrades are generally good for homes and rentals, they can raise your tax bill. So many homeowners wait to make significant changes to the property until after a tax assessor evaluates the property. Number 5, get a second opinion. If you disagree with the value of your property as determined by a tax assessor, you can hire an independent appraiser. Although this option will cost you some money, it could be worth it to potentially lower your tax bill. Remember, a second opinion won't automatically lower your property taxes, but it can help if you plan to dispute the assessor's valuation. And lastly, number 6, see if you qualify for tax exemptions. One of the easiest ways to lower your property taxes is by seeing if you qualify for any exemptions. Many state and local governments give tax exemptions for several reasons. For instance, seniors, veterans, or people with disabilities could qualify for tax discounts. To determine what exemptions you qualify for, check out your local tax laws. In addition to what we have already discussed, there are a couple of other factors that might affect your property taxes, such as moving to a new area. Tax rates are based on state, county, and city, so your taxes will likely differ even if you move to a comparable property in another location. Increase in home sales near you. Property taxes may increase with more neighborhood sales. More sales indicate that the neighborhood and properties are more desirable, which generally calls for higher taxes. Neighborhood improvements. Making a neighborhood more desirable can in turn increase home values, which drives up property taxes. And lastly, government policies. Property taxes help fund several local initiatives, including schools, police, and fire departments. So, when more funds are needed to maintain them, taxes inevitably increase. The first and best step to potentially lowering your property taxes is educating yourself on how they're determined. Then you can take the necessary steps to reevaluate your home or appeal your tax bill. For more advice on a variety of other issues important to the rental industry, subscribe to the Bay Property Management Group channel, and don't forget to hit the notification bell so you never miss out on our exclusive content. If you like this video, please give it a thumbs up or leave a comment down below. Thanks for watching, and we will see you in the next video.